Well, as we begin this segment here, I'll just come out and say the markets are all over the place. It is like herding cats trying to keep up with the grain trade today. We have markets doing a little of everything. And let's take a look at our current prices here with our quotes provided by Bar Chart, beginning with the corn. As of now, and I have to say as of this moment, May corn is 3.5 cents lower. We're at 7.47 1/4. But, you know, if you stick around a minute, it may be the other direction. The December corn currently down 1 3/4 at 6.41 per bushel. It's been higher, it's been lower off and on during the day. Soybeans have by far gotten the gold star today for having the most strength. It's kind of flexing its muscle a little bit. May soybeans now 31 cents higher at 16.91 1/4, make it 31 3/4 higher. The nearbys are leading the charge higher in the soybean trade. So while the May is over 30 cents higher, November is up only 8 1/4. It's at 14.61 1/4. So now they're back to widening that spread out once again. Then we get into this alternate universe of the wheat market. And you're dealing with limits today that are now $1.30. They can go that much higher, they can go that much lower. They can do both if they want to today. And you have the May Chicago wheat now 75 1/4 lower at 12.18 3/4. And in this realm, we have that July contract, the new crop, down $1.05. It's down $1.05 at 11.47 1/2. I almost have to learn how to read these quotes. They're just so outrageous. If you look at the Kansas City market, you currently have the May down $1.03 1/2. I've never given a quote like that before. They're down $1.03 1/2 at 11.48 per bushel, and that's within 4 cents with its low of the day. It had a high of 12.72 1/4 last night. July, the new crop is down 99 1/4 right now at 11.34 1/2. Just unbelievable. In the Minneapolis market, you have the May contract spring wheat after a large sale of 193,000 tons of spring wheat to the Philippines overnight. What do? It's now limit down. May down 60 cents at 11.37 1/2. Brian Hoops is on board. He's with Midwest Market Solutions. Brian, help me out here. You have a big export sale and you go limit down. I mean, it's an upside down world today.
It's a crazy world that we're living in and trading in, Marlon. You know, you look at the wheat, the range that we've had overnight at over $1.30. I'm not sure the first year in business that I was in the commodities that we traded the entire year of wheat in that type of a range, let alone in one evening. And so it's extreme volatility. Wheat's acting like I think a lot of people expected it would when we finally were able to release all this pressure that had been building up from the lock limit status. When we were able to release that, then we start trading back to maybe more fundamentals, and that doesn't justify price levels at this level. We just are not able to export any wheat on the worldwide market, and so we are seeing some premium taken out of that wheat market in here. You probably can make an argument that it's surprising that May corn is not being drugged down even further with the big drop in the wheat market. But you have that supply and demand report out tomorrow, and soybeans starting to trade that news. We're looking for tighter ending stocks, tighter balance sheets for soybeans, particularly corn. The average trade guess is for a drop in ending stocks. I'm not sure I agree with that. I think it's going to be more of a steady type market, but certainly trade's going to be watching the ending stocks numbers, demand, as well as world production figures, particularly corn and soybean production in Argentina and in Brazil in tomorrow's report.
So finally, something else to talk about other than Eastern Europe. Yeah, we may focus on South American production. It's been a couple of weeks. Brian, we'll take a look at our livestock trade in just a moment. Don't go anywhere. We'll be right back. Well, let's continue on with Brian Hoops, but I want to take a look at this crude oil trade. As I mentioned a short time ago, it was over $10 higher, and a lot hanging on that as far as what the future impact could be on other commodities as well. So right now, on our West Texas Intermediate crude oil, we are $8.77 higher on the April at $128.24, and it has actually backed off about $1.20 from its earlier high here a little bit ago. Looking at the live cattle market, we currently have live cattle trading higher by $1.20 on the April contract. We're at $139.10 per hundredweight. But beyond that, everything is kind of narrowly mixed. If you look at the feeder cattle trade, We have the April contract 95 cents higher at 160.62, but it's exactly a dollar off of its earlier high this morning. So it kind of ran out of gas after the open. Lean hogs are showing triple-digit gains across the board. Look at April, up $1.32 at 101.60. May up $1.60 at 106.67. But here again, May is a dollar off of its earlier high this morning. So let's go back to Brian Hoop's livestock trade. It has signs of bullishness today, but it just can't seem to hang on very well.
Yeah, I'm glad you put the crude oil chart up ahead of the cattle chart because those are going to be intertwined, I think, going forward here. You know, the concerns we've had for a long time about this economy is as gas prices rise and inflation costs increase, you fill up your tank of gas in your car. How much money do you have left to go buy steaks at the grocery store? Do you go out to eat and have a steak? You know, it's becoming much harder for the American consumer to spend that type of money when you have not only the gas prices we talked about, but heating bills increasing, and basically the cost of all goods and services are on the rise in here. So that is going to adversely affect our demand for beef and for pork. So something to really keep an eye on is President Biden expected to talk here soon, shutting down imports of oil from Russia. A lot of this is probably already baked into oil prices, but it does take supply away from the marketplace, and it's going to be a hard time to see oil prices turn lower, hard to see gas prices turn lower anytime soon. And that means that we are going to be contending with this all the way into the spring and summer, when summer demand for gas increases even further as people get out and travel.
Good point. I appreciate you taking time to talk with us here today, Brian. Brian Hoops of Midwest Market Solutions. Lots going on. Janet, back to you.